Good morning, good afternoon, good day. Welcome to my live market meeting 10th February 2021. I am Sagar Nandi. I used to work in IT. I have retired now, swing trading stocks using Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website, YouTube channel and Twitter page. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the systems I use in my live trading, and these are the underlying platforms and data. I'm going to use the same systems today. That was the last slide of my presentation. I'll continue with the live system now. Let's start with a study of the global market, starting with Australian index AXJO. We are looking at it using the standard weekly daily at a glance template. I'm using Q Global running on Metastock now. In the weekly chart, it is continuing to move inside the megaphone pattern. The weekly candle has an upper tail. Price tried to go above in the daily chart and then reversed. If price continues to reverse downward, then the megaphone pattern will continue its progression. It is at the upper edge of the megaphone pattern, as I mentioned in the last webinar. That is not a point to take new long trades. Over longer period, it is of course bullish. Next, Japan Stopics Index. This week's candle is bullish in shape and color. In the daily chart, it broke out of the watermark resistance. The last buying opportunity would have been at the swing low. Now it is above upper boundary. For Q technique, one may wait for it to pull back and then go up again, giving a go with flow trend following long setup that is going to have low risk and narrow stop loss. Right now it is bullish, but it is extended, also shown by the stretch overbought indicator. That is not a time that I like to buy. Next is China CSI 300 index. China CSI 300 also went up sharply in the weekly chart. Same as in the Australian market, the last buying opportunity would have been at the swing low. Now it is near the upper boundary. That is not a point where I like to buy. Next, FTSE index, UK market. This was the weakest of the global markets and that is continuing. The weekly backdrop color is remaining bearish. Daily is struggling to go up. Today's candle so far is having an upper tail. Traffic light color is green, bullish. There is no short setup and there is no long opportunity because it has multiple trend line support nearby. Lastly, India's Nifty 50 index. That was the strongest of the global markets. This market also has an upper tail similar to another global market that we saw. Yesterday there was an indecisive shape candle, and today also, Wednesday, the Indian market has indecisive shape candle. It is of course very bullish longer term. In the daily it is at the upper boundary, not a point to take new long trades. The last buying opportunities would have been when price made a swing low. All the global markets are bullish except the UK market. Let's see what is the state of the USA market. For that I'm going to use Q Elite on TradeStation. Let's start with the S&P 500 ETF SPY. The weekly candle color is bullish. Shape is also bullish so far. Daily is going up too close to the upper boundary. The same conclusion as in the last webinar, bullish but overbought. Not a time to take new long trades. And that will probably be a theme valid for the other ETFs as well. QQQ. So far this week's candle is doji shape. In the daily it is near the upper boundary. Overbought, bullish but overbought again. IWM, this was the strongest of the 4 ETFs that is continuing. The weekly shape is more bullish than the SPY and QQQ. Color is bullish. Daily is bullish above upper boundary. Overbought for 4 days now. Bullish but overbought. And lastly, DIA. It could not make a new all-time high when I discussed it in the last webinar. Now it has broken out, made a new all-time high, broke out of watermark resistance in both daily and weekly. It is underperforming the market as shown by the relative performance, sharply tilting down. If the market pulls back, then DIA may be the ETF that will give a lowest risk shorting opportunity before the others. Overall, all the markets are bullish except the UK market. All the global markets and USA market is certainly bullish also. Now let's look at the market internals. Market internals showed some weakness last time. That was the weekend market roundup study. These studies, some of them are best studied at the end of the week. I am looking at it today at the close of Tuesday, but we may keep in mind that the weekly plot is going to change before the weekend. Still, let us have a look at it, starting with the mega cap top 20 index. Mega cap top 20 was outperforming the market, and in the last few days it is starting to underperform again. Earlier it was range bound. At this point it broke out of the range, and I mentioned that even if it was a stock, I was not going to buy the breakout. I would rather wait for a pullback and then for price to go up again, giving a proper go with flow long trade setup. It has not pulled back, it is slowly going up. Yesterday's candle shape was indecisive. Day before was also indecisive, and it is at or near the upper boundary, not a point to take a long trade. Bullish but overbought again. Yesterday some of the mega caps went up and some didn't do so well. We may look at some of them. Let's look at the other market internals. Hi, Fran. I'm going to look at the major markets to look at the percentage calculation. The major markets are Dow Jones, Nasdaq 100, S&P 1500 and S&P 500. The percentage of stocks were 50 MA above 200 MA. For Dow Jones it is flattening out. For Nasdaq it is flattening out. For S&P 1500 it is continuing to go up. S&P 500 also it's continuing to go up. Percentage of stocks above 50 MA that rolled over some time ago. For DJI it recovered but didn't go above the average line yet. The same is true for Nasdaq, recovered but didn't go above the average line. For S&P 1500 it crossed above the average line yesterday. For S&P 500 it didn't cross over yet. So we can see from these studies that S&P 1500, the broadest market, is relatively stronger, showing that probably smaller cap stocks did better last couple of days. If we look at the last percentage MA calculation above 200 MA, percentage of stocks above 200 MA, for Dow Jones it rolled over earlier, tried to recover but rolled over again yesterday. The same is true for Nasdaq 100, S&P 1500 recovered above average line, earlier it rolled over. S&P 500 rolled over, recovered but couldn't go above the average line. This is showing that S&P 1500 has relative strength. That is, the smaller cap stocks are showing relative strength. Let's look at the weekly plot now for the internals, new high low advanced decline up down volume, same major indices. New high low not showing much weakness, normal movement. I showed in the last weekend YouTube live session that advanced decline was showing weakness. That is true, though the market made new all-time high, the advanced decline for all the four major indices is rolling over. The highs are becoming lower and the lows are becoming lower also. The same is seen from the up-down volume also. Now these internal studies show market weakness before the indices. Every time we have a market correction, the internals show the weakness before, and that is logical because it is easier for a large number of stocks to drop but a smaller number of large stocks to go up to keep the market index up. Therefore, when the market is really going into a correction, the internals, especially advanced decline, up down volume, logically would show the weakness first. That has happened before and I expect the same will happen next time also. The weakness is currently there in the internals. Before taking short trade, of course, we look for actual weakness in the indices or the stocks where we are looking for short setup. As I mentioned, no significant correction had occurred in the past without the distribution count in this market breadth total view study, weekly and daily, that combines all the 6 indices, 4 major indices, Dow Jones, Nasdaq, S&P 500, 1500, and then NYSE composite and Nasdaq composite. It is a total view of all those 4 indices. no major correction has occurred without the distribution count, that is in red color, being 2 or more. Often it is preceded, any correction, major correction is preceded by distribution count of even higher, 3, 4, 5 or even 6, but at least 2. At the right edge we can see distribution count of only 1. In the past no major correction has occurred after only distribution count of 1. That I mentioned earlier when this distribution count came, and there was not so much cause of concern because it was not 2 or more, and certainly the market rallied and made new all-time high. Now if we look at the percentage calculation for the 6 indices together, then we see percentage of stocks above percentage of stocks are 50 MA above 200 MA is continuing to be bullish. Percentage of stocks above 50 MA rolled over but recovered both for weekly and daily, unlike the major indices. That is showing that the total view is more bullish than the major indices. That is because the smaller caps went up stronger. Percentage of stocks above 200 MA is flattening out. That is about the same or maybe little bit stronger than the major indices. So the conclusion we have is market is continuing to be bullish. Internals in terms of distribution day is bullish. However, internals in terms of advanced decline and up down volume is showing weakness. We are now going to wait for a reversal signal in the weekly and or daily charts of the major indices or composite indices to start to look for shorting opportunities. Currently there is no such weakness. The weaknesses would come either in the form of a bearish headwind or a bear release signal. Only reason for caution is the advanced decline and up down volume rolling over. That was a study of the global markets, the USA market ETFs and USA market internals. Let's look at the sector industry internals now. Sector industry stock breadth, and this is Q edge. Many of you are probably running it every day, all the time in streaming mode. Right now I have switched off streaming because market is closed, but during market hours most likely all of you like me are running it in streaming mode throughout the market hours when you are in front of computer. To make it easier to the eyes, I have changed the background color of only the home page, which we see every day all the time, in gray color. The other tabs are having the same background as earlier because we are not going to keep looking at the scorecards all the time, but we are going to keep this home view running all the time. So I changed it to gray color. It is proving useful for me. It is running on one monitor all the time. Now this particular release has some enhancements you may or may not need to download depending on how useful you see these changes. One is I have added the alternate sector percentage, alternate industry percentage navigation buttons on the home page. Earlier we had the primary sector percentage, primary industry percentage buttons. Mostly you are going to use only the primary buttons. Sometimes for sectors or industries that are not available in primary classification, you may look at the secondary classification. I used to go to the tabs for that, but now you may use the navigational buttons as well. Another tab I have added is graph. This is actually industry graph. There is not much point of making graphs for sectors because trading decisions are made at the industry level, not at the sector level. Sector level is too broad for making trading decisions. Though we look at it for valuable top-down analysis, the trading decisions are made based on industry strength or weakness. And this graph tab is going to show a graphical view of all the industry calculations in recent days, starting from real time to a number of days, showing the industry score, alternate industry score, industry percentage, alternate industry percentage, if they are improving or deteriorating. This graph is for industry, and the standard icon for industry, that was the gear icon, 2 gears, and I have added a new icon on some of the pages that is a single gear that will also show industry information, but that is the graphical information. I will make use of that. Now, before I go through the advanced declaring, I want to show the graph now. Now meaning now that I have not drilled down from market level to sector industry level, let's look at the graph, and you will not have much use of the graph when I have not filtered on any sector and industry, because this has all the industries. Of course, we cannot read it, nobody can read it with any clarity. The industry score, alternate industry score, industry percentage, alternate industry percentage. So when nothing is filtered, we are not going to look at it, but when we look up a stock's industry from vital using the single gear, then the graph will show very valuable insight. If we didn't want to see the graph, of course we continue to have the look up the industry score, primary industry score or secondary industry score based on what is selected in the peer relationship criteria. That button is also available, but you may sometimes prefer to go to the graphical view first. This button is added on the Q Vital here home page and all the stock pages. The earlier lookup industry scorecard button is also there. If I go to Q index, that is useful for market level index analysis. Again, I have the earlier lookup industry scorecard and now look up the graphical view of the industry performance. I will make use of that and show that when you look up a stocks industry from the Q Vital or Q index, how useful this graph is. From time to time, I was using these graphs to post in forum trade ideas or tweets, and now you have access to the same one automated. Remember not to try to make use of it when we are not looking up the industry of a stock. Having said that, let's go back to the useful 1 month to 1 day, 1 month to 1 day, 1 month to 1 day. How many times I have to say that? Sector advance decline, industry advance decline, and stock advance decline. And you can see now everything is green. However, interestingly, see yesterday the market was going up. However, the advance decline is weaker than all the previous periods. That is something to take note of. It doesn't mean that the market is bearish. Market still went up, and overall the breadth was still bullish. The green pie portion was bigger than the red pie portion. So we have to say objectively that from 1 month to 1 day, sector, industry, stock, advanced decline breadth is bullish. There is no other way of putting it. The advantage of using Q systems is that whether we are looking at market analysis using global market, USA market, market internals, total view, sector, industry breadth, or the technical charts, it is largely unambiguous. Looking at this breadth, it is not possible to say it is bearish. It is bullish. Okay, yesterday was not as strong as the 1 month period or 2 day period, but we have to say it is bullish. That's the advantage of one of the advantages of using Q systems. It is largely unambiguous. I have found that to be extremely valuable in trading. There are many commentators in the market who say something like, on the one hand, these are the reasons market will go up, then on the other hand, why it will come down. That kind of analysis, on the one hand, on the other hand, is not useful. We end up in those cases buying what is our bias. We don't use the analysis because the analysis itself is ambiguous. That is not the case for Q. We have been able to design the systems and techniques. That just the system was not enough, even the techniques, the checklists, etc. for the trade setups, they are unambiguous as well. So market breadth is bullish, sector level is bullish, industry level bullish, stock level is bullish. If we see yesterday, 8 sectors went up, 3 went down. That is interesting. 3 went down, and I tweeted about it earlier. They are non-defensive. One is energy, one is consumer discretionary, almost unchanged, went down by a very small percentage, and materials. If the market is very bullish, usually we would expect the defensives to go down. But yesterday that was another anomaly. The defensives were up, utilities, real estate, consumer staples. The ones that were down were energy and materials. Just to keep that in mind. And if we look at longer term view, over 5 days everything is bullish now. Over 10 days everything is bullish. Over 1 month everything is bullish. This is as bullish as it gets. Very nice picture. Large percentage gain in some of the sectors over 1 month. Communication services over 1 month up by more than 10%. Consumer discretionary 12.4%. Energy more than 10%. These three sectors were up by more than 10% over 1 month period, the blue bars. And over all the periods, all the sectors are up. That is certainly bullish. Now let's look at the technical breadth, that is using Q Finder. Start with the weekly picture. I mentioned of this scenario in the last webinar also, I think. If we look at the balance of bulls and bears, technical signals, all the Q signals, if we look at all signals, it is predominantly bullish, 86%. Strength signals, extremely bullish, 99%. Trend continuation also extremely bullish, 87%. Only reversal signals are bearish. I think that was the thing true for the last webinar also, and I mentioned that if the market rolls over, these stocks may give shorting opportunities if the market rolls over. That has not happened yet, but I see the weekly reversal signals are continuing to be bearish. Of course, overall it is very bullish in the weekly period. Weekly here means up to Tuesday's market close. And daily, yesterday we can see it was overall bullish, except again the reversal signals. The reversal signals are again more bearish. Those are the headwind signals, box setups, reversals, and trend line touch. If the market rolls over, this may give shorting opportunities. Now in Q technique, because we have these signals, because we know some of the instruments were moving in a megaphone pattern, because we know some of the market ETFs futures are near upper boundary, we are able to look at some of these stocks giving reversal signals and get ready for shorting. We don't have to wait like everybody else. We can get ready and create a watch list for shorting. We may look at some of the stocks giving reversal signals later. Before that, I wanted to have a look at two stocks that I was thinking of shorting and getting ready, but they did not confirm the setup because we have unambiguous checklist for all the Q standard trade setups. Sometimes I anticipate a setup and post about it, being ready to short if the setup is confirmed, but these two stocks did not confirm the setup. That is also a valuable skill to have, not to pull the trigger unless the setup is confirmed. Let me have a look at these two posts. One was on TWLO, TWLO. I shared it 2 days ago, 8th February. Let's look at the 360-degree snapshots. The industry, internet services and infrastructure was patchy. Not the strongest, not the weakest. However, it was decelerating that allowed shorting. TWLO was overvalued with poor earnings quality. It has earnings growth, however, overvalued stock, and on that day when I shared the idea, it was down. So one could think of shorting it based on valuation. And I saw several reasons to be ready to short it on the Q charts. In the weekly, it displayed a bearish headwind. That was this week. Next week went up sharply, couldn't close above the high of that bearish headwind candle. Next week, it tried to go up, tried to go above the watermark resistance created by the bearish headwind, but was reversing and the color changed to neutral. In the daily also it had a bearish headwind signal from where price could drop sharply. Then it recovered, went above the watermark resistance only to pull back, creating a false upside breakout in both daily and weekly. The daily candle shape was bearish. It had a bear release signal. Therefore, if the candle color changed to neutral or bearish in the daily chart, that would confirm a box short setup at the double top. That was what I was waiting for. Box short setup in a stock that was overvalued, in an industry that was decelerating, and if I had the confirmed setup, you may note that the stop loss would be very narrow, just one candle high. However, the candle color did not change to yellow or red. Let's look at the live system. TWLO. The daily candle color never changed to yellow, and in fact by the close of the day the bear release signal also disappeared. Those were two reasons why the box setup was not confirmed, and one could get ready but would not enter the trade. The box short setup possibility is still there. It will be even better if it pulls back now, because that will make the false upside breakout even more pronounced. So I am keeping an eye on TWLO for that. Fran has a question on YouTube Live. What will be the entry point on fine-tune chart? Fine-tune chart is used for either intraday trading, which I don't want to discuss much in the webinars, or for precision entry of swing trading. If the setup is confirmed, let's say Twilo pulls back today and the box short setup is confirmed. However, a trader may be in office and not able to take the trade near the market close, then he or she may try to take the short trade next day. We call the day after the signal day. And in that case, one may use fine-tune chart. Fine-tune chart can be used to enter a trade using early range breakout technique or using the stretch release signal. I explained it in the last class for gold, GLD, how one could take the early range breakout technique in an instrument where one was already prepared to take a long trade. At least I was prepared and I could use that technique. If Twilo confirms a short setup today and one wants to enter it tomorrow after market open, then the same early range breakout technique can be used. Of course, for Twilo, it will be in the short direction. The same technique that we used in GLD, the exact same technique will be used in TWLO. Again, the signal has to be confirmed first. Now, if someone is anticipating Twilo to make a pullback today, then one could take the trade today after market open. So today after market open, it will create its own early range high and low. If one is anticipating that it is going to drop, then when it goes below early range low, one may take a short trade. But there has to be some basis of such anticipation. One such basis could be that the industry is weak, that the stock tried to go up but now reversing, and that the market is also coming down. That could be a way to anticipate. But remember, anticipation doesn't mean it the signal will be confirmed. So if one takes a trade based on anticipating a pullback today and a confirmation of box short setup today, if it is not confirmed by the end of the day, then one should exit the trade following Q guideline. Now, such anticipatory trades may work better if the market is aligned with the stock's directional move. That means what I do, I keep an eye on QH and this market breadth studies on separate monitors. QH is of course always running. It shows whether the overall breadth is bullish or bearish. Not only that, over time is it turning lower. The breadth is becoming more bearish. If I see that and then I keep an eye on the market breadth internals using Q Elite. What are the market breadth internals? They are the internals for Russell 2000, Dow Jones, Nasdaq 100, S&P 500. What are the internals? Ticks, advanced decline, all intraday studies, and up down volume. And on the left I have the same internals for NYSE composite and Nasdaq composite. Tick, advanced decline, up down volume. The candle charts for the composites I am using Nasdaq 100 and S&P 500, but the internals are for composites and then the four major indices. On Q Global, we have the same internals for daily and weekly period. And here I am using Q Elite intraday breadth. Why am I using it? I am seeing if the overall market intraday is bullish or bearish and then which direction it is moving. Yesterday was a mixed day. So if I am trying to take an anticipatory trade and market is mixed like it was yesterday, then that is probably not a good day, not the right day to take an anticipatory move because it was mixed. Why it was mixed? If we see the intraday market breadth yesterday, Russell 2000 was much stronger. Now remember, for Q fine-tune chart, when I am looking at multiple instruments together, how do I know which one is stronger? That is not based on the percentage move, but how the instruments are moving relative to the pivot points. And relative to the pivot points, early range, high and low I'm using now, the Russell 2000 ETF IWM moved up strongly. Dow Jones also moved up strongly. Nasdaq initially moved up strongly but pulled right back inside the early range. S&P 500 moved up not so sharply, pulled back, went up again, and near the close of the day it tried to pull back again inside early range. So both Nasdaq 100 and S&P 500 made attempts to come back and sometimes succeeded to come back inside early range. Whereas Russell 2000 pulled back but never came inside early range, and same was true for Dia. That was showing that relatively speaking Russell 2000 and Dia were stronger. That is how the Q fine-tune charts are to be used to see relative strength or weakness, not based on the percentage moves. Now if you looked at the internals also, let's look at advanced decline. For Russell, it was mostly positive other than the early part of the day. In the later part of the day, though Russell 2000 ETF was pulling back, the advanced decline was always positive. Whereas Dow Jones was negative throughout the day. Whether it was the early part or the second half of the day, Dow Jones advanced decline was always negative. Nasdaq was very mixed, choppy. Down, then up, down, up, down, up. S&P 500 was down in the early part and then neutral in the later part. That was also showing that Russell 2000 was the strongest. Dia in terms of advanced decline was actually the weakest. Nasdaq 100 was all over and S&P 500 was neutral. Down and then for the closing, the next half, the second half neutral. And if we look at up down volume, IWM was positive throughout the day. Dow Jones initially turned positive for a while and then was down throughout the day. Same for Nasdaq, up for a while, down for throughout the day, and S&P 500 down for the whole day. If you looked at it in real time along with QH, you would know that the picture was mixed, and you would also know that small caps were the strongest yesterday. When you see the market is mixed like this, then you don't try to anticipate a trade before the close and take it. That is not the Q guideline. Only if all the instruments were weak yesterday, or let's say today if all the market breadth intraday studies using Q Elite, this plot, they are weak, including the composites, and we see Q edge is showing weakness, then I may sometimes act on a trade that I am anticipating, be it Twilio or be it CrowdStrike. Let's look at CrowdStrike. That was another shorting idea that I shared, but that didn't confirm. This is CrowdStrike. And you may see how I am anticipating a trade, getting ready, and then using the fine-tune chart, market breadth, internals, and also Q edge to precisely take that trade, sometimes in anticipation. CrowdStrike also shared 2 days ago on 8th February. Let's look at the 360 degrees plots, all unambiguous plots. Was showing deceleration. The industry score weakened substantially. CrowdStrike was down on that day. Overvalued stock has great earnings growth, but I was allowed to short based on valuation. The weekly displayed an indecisive shape candle, or rather bearish shape candle, that tried to go up and closed sharply lower. After that it had an indecisive shape candle, and since then for 3 weeks it is having bearish backdrop. Daily displayed bearish headwind, pullback from there. If you go through all my posts, you know that somewhere here I profitably shorted CrowdStrike again at the top of the market. This was one of the stocks that I shorted earlier, came out with a profit. Now it recovered but could not go anywhere near the previous high. When I shared it, it was starting to come down with a reversal candle. This was intraday snapshot. If the daily candle color turned bearish magenta, that would confirm a go with flow trend following short setup. So I was looking for that, and I would be happier to take it because it also had a reversal setup at price extreme or pendulum high. But this also didn't confirm. The magenta candle in daily didn't come. Let's look at CRWD. I think I was in mute for a few minutes. Let me repeat this part. The bearish flow candle didn't come, so the go with flow short setup was not confirmed. I wouldn't take the trade, and now even if the bearish flow candle comes, the trend line support is too close to take a short trade. That is how for two stocks I was ready to short, but because the signals were not confirmed using unambiguous checklist, I did not take the short trade. Let's now look at some of the bearish signals on QFinder, and hopefully that will allow us an opportunity to look up the industry graph also using live analysis. Let's go to QFinder. I looked at some of the stocks giving bearish headwind earlier. Sorry, I looked at it from the weekly interval. The weekly interval is having 36 bearish headwinds. We saw weekly has more bearish reversal than bullish reversal. Let's look at the bearish headwinds in weekly. 36. Let's flag on them. One of them you can see is coming down with bearish pressure and a reversal candle in the weekly chart. For the week it is down by 9.5%. The ticker is MSGN. Let's look at MSGN. MSG Networks. No, not there. Finder. msgn.o, sorry, msgn.k. This is daily. Let's look at it using weekly, daily at a glance. I was looking for charts with weekly bearish headwind from Finder. Now, when I open the stock chart, I see that it has a bearish headwind in weekly, sharply coming down with bearish backdrop color, bearish shape. 1 week ago, it had an indecisive shape candle after an up move. The week before that also had an upper tail. So for 2 weeks, it was flashing warning signals, and this week it is coming down sharply. Now it has created kind of lower high and lower low. Daily also displayed a bearish headwind. Yesterday, daily fell down sharply. Bearish flow, bearish shape, bearish pressure, bear release signal. How many bearish signals are there? Let's count again. Weekly headwind, backdrop, weekly shape, weekly pressure, weekly U-turn, weekly bear release, weekly reversal. In the weekly, we have 1, 2, 3, 4, 5, 6, 7 bearish signals. 7. In daily, how many? Lower high, lower low, bearish headwind, bearish shape, bearish color, bearish pressure, bearish release. 1, 2, 3, 4, 5, 6. 6 plus 7. 13 bearish signals, all are unambiguous. Certainly, this is not a stock you traders will buy. Can you see how when the market is very bullish, everybody is bullish, using Q techniques, you are able to find stocks that are ready for shorting. And if you were tracking these stocks in real time yesterday, you would know that this is a very weak stock. Even the bearish headwind came yesterday, bear release came yesterday. Now, if it continues to come down today, could we short it? Remember, we always want to have market as our friend. If the market is continuing to go up, we avoid shorting. Sometimes you may short an industry that is weak even if the market goes up. That is also possible because sometimes some industries move opposite to the market. So if you see this industry, MSGN's industry is weak, looking at the technical weakness, it is possible to short, but I prefer having the market also aligned. Market has a tremendous force, but sometimes it is okay to short based on the industry weakness. Why? Because it shows the macro forces on the industry are causing the stocks to come down together, not just because of an individual stock's weakness. So let's look at the stocks fundamentals and industry, msgn.k. Let's start with fundamentals using Q Vital. Everything is in 100% real time. Another, I think, great advantage of using Q systems. It has retrieved the industry, cable and satellite broadcasting. Now remember the lookup industry graph button. Instead of using the lookup industry scorecard, I'm going to use the lookup industry graph button. Let's do that. And now you will see the graph is providing very meaningful insight for primary, secondary industry score as well as percentage. Isn't it beautiful? All the Q plots are beautiful, I think. In real time during market hours, even the real time plots will come up. Now it is showing 5-day, 2-day, and 1-day performance. The counts are about how many industries are up and down over those periods. The plot itself is showing this is primary industry score, alternate industry score, primary industry percentage performance, alternate industry percentage performance. We can see from the industry score that primary industry score is improving. So relative to other industries, it is becoming stronger. If we look at the alternative industry score, we see relatively speaking, it is getting weaker. Mixed signal. We may now learn a little bit more about the stock to see you think it belongs to the primary industry more or secondary industry more. Primary industry scorecard is showing it is relatively speaking strengthening. Secondary industry score is showing relatively it is weakening. But if we look at the percentage, primary industry performance, 1-day, 2-day, 5-day steadily up. Secondary industry broadcasting is down yesterday. So the industry, if we look at the whole picture, is not so strong. Isn't it very useful to have this plot now? Now from here, I can of course use these action buttons to go to the different scores or percentages. Usually I buy in strong market, so I just need to look at the relative strength. I look at this. I don't need to usually look at the industry percentage performance because I know that would be strong. Why? Because I am buying only in the strong market. If I am buying in a weak market, then I would also like to check the percentage, which is showing from the graph, but for longer period, I may look up the percentage. Let's look at the primary industry score over longer period using this navigational button. Okay, now it is showing that relatively it is certainly becoming stronger, cable and satellite. It is showing acceleration also. On the other hand, if I see the alternate industry, it is weakening. What was shown in the graphical form, now we can see that pattern playing out over longer term. So you may now, like I am doing, sometimes from Q Vital, look up the graph first. If the graph is very bullish, you may make your decision from there, or no harm clicking the view relative score button to check out the relative score over longer period. So if it is more in the cable and satellite business, certainly we can buy. How can we know? Let's look at Q Vital, look at the description. It can be classified as cable and satellite as well as broadcasting industry stock. From the description, we can try to find out. Let's read it. MSG Networks, formerly the Madison Square Garden Company, is engaged in sports production, content development, distribution, etc. Now, those of you who are in the USA may already know from the description. Madison Square Garden Company. Is it cable and satellite mode or broadcasting mode? If you wanted to know in more detail, like I do sometimes, I go to icon. That's the strength of Metastock Zenith. I am going to go to overview and business information. It shows the different segments and different geographies. I think it is primarily US geography based, so there is no geographic information, geographic breakout, and it is in MSG Sports, MSG Media, MSG Entertainment, and the different revenue percentages. Usually those who are in the country USA, from the segment information, from the business description, and from these different classifications, it is possible to understand, is it more cable and satellite or broadcasting? Of course, those who are using their products and services will instantly know. I'm not using their products and services. I'm in Thailand, so I may have to do some extra work. But if it is more cable and satellite than broadcasting, certainly I can buy now in terms of industry strength. And now I can see fundamentals, great valuation, excellent valuation, excellent earnings quality, steady earnings growth. Those are reasons enough to buy in terms of valuation. Can we short it? No. If it is strong enough to buy, I'm not going to short it. So even though the technical showed a possible short setup, I'm not going to short it. So MSGNK, how we came across that? We came across that as a stock having weekly bearish headwind, but we are not going to short it because the industry was not clear, at least to me yet, whether we should use primary or secondary. One was strong, one was weak, and the fundamentals were strong, too short. So let's delete MSG networks from the view. Let's look at, why don't we look at next one, motor car MPAA. It is down by 8.9%. MPAA. Our starting point was the bearish headwind, and now we can see it came to the weekly watermark resistance, multiple of them, 1, 2, 3, created a false upside breakout with a bearish headwind, bearish shape candle, bear release signal also. In the daily, created a false upside breakout, bearish flow, bearish shape, bear release, bearish pressure coming down from pendulum high, very high volume, many bearish signals. If you found this stock when it was creating the false downside breakout, and if you were anticipating it to come down, you could short at that point using fine-tuned chart. That was a question from Fran. If you were anticipating this stock to come down, maybe based on the bearish headwind in weekly, the false upside breakout in weekly, daily both, you could use early range breakout technique yesterday if the market was bearish, but market was mixed, so I wouldn't try to anticipate a short trade in a mixed market. But if market was bearish yesterday, this could be a candidate to take anticipatory short setup when it was coming down. Now let's look at this fundamental MPAA, auto parts and equipment, and auto truck motorcycle parts. Both are related to auto parts, so I expect these two industries to show similar relative score. Let's look up the graph again. Yes, they are similar now. That's good. The primary industry as well as the secondary industry, their relative score is reducing. Their percentage performance turned negative yesterday. So this is giving a consistent view. I think in a way it is good we are analyzing two stocks. The last stock had different insight from primary and secondary industry. Those need more work, or we may avoid trading those. But this particular stock MPAA, the primary and secondary industries are showing similar weakness. So we are more comfortable shorting it. But if I look at the fundamentals, this is not allowing me to short. Great valuation, has positive earnings growth also. So it's neither weak in terms of valuation nor weak in terms of earnings growth. That doesn't allow me to short. Just technical analysis is not enough for me to short. So I am demonstrating different ways to look at stocks using Finder and get ready to take a trade. In this case, because market is extended, I am looking for bearish setups. You could do the same thing for bullish setups also. I looked at two stocks giving weekly bearish headwind. Trade signals come from the daily interval for swing trading. So let's look at some of the bearish headwinds in the daily interval. There are 35 bearish headwinds in daily. Flag them. 4 of them have bearish pressure. One of them, iridium, has many bearish signals. Firstly, it is at pendulum high, then it is coming down with bearish pressure with a gap down open, bearish breakout, bearish flow, bearish headwind, bear release, a possible box setup. Yesterday it was down by 12%. Even before opening the chart, we know that it is a stock at price extreme high and displaying 1, 2, 3, 4, 5, 6, 6 bearish signals, down by 12.6% on a bullish day. Let's look at this stock, Iridium Communication, IRDM, and it indeed has the bearish headwind in the daily. Let's look at it using weekly daily at a glance. Very weak, isn't it? The weekly fell sharply. The backdrop color flipped from bullish to bearish, bearish shape, bearish pressure, bear release, reversal signal even at weekly pendulum high, very high volume, down week. In daily, it was above upper boundary, a place where I don't like to buy. Yesterday it gapped down at the open and continued to go down, created a bearish headwind, bearish flow, bearish pressure, bear release at pendulum high, extreme high volume. Isn't it totally unambiguous how I am reading the charts and how you will read the charts? There is no ambiguity. Two people looking at the same stock using Q systems, be it industry, fundamental or technical, will come to the same conclusion. This is not a stock to buy, and I missed it. It also broke below trendline support. Let's look at this stock using fine tune chart. When it was breaking below trendline support yesterday, that would be around 50.5 price point. We want to see if it was going below early range low at that time. Then it could be a short candidate using intraday chart. Let's look at it using Q Elite IRDM. Here it is. Yesterday IRDM opened with a gap down. Actually, more than that. Large gap down. Opened here. Previous day's close was here. So this was a large gap down. Then early range high, early range low formed. I'm using 10-minute interval in the morning session. You would or I would use 5 minutes. For now, let me continue. When price broke below early range low, it was also below the 50.5, that was the daily trend line memory support. So it was breaking below trend line support and broke below early range low. So the short point would be this one. Let me change the color. This should be the short point. For the day, stop would be just above early range high. This was the risk distance, and by the close of the day it covered almost the same risk distance, and one could put at least partial profit. Now, was there any short setup that was confirmed at the close of the day? Yes, it confirmed several short setups. One is bearish headwind. Bearish headwind has the requirement that the headwind signal should come. It should have been in an uptrend earlier. The stock was in an uptrend above early range, above upper boundary. Then it dropped with bearish headwind, bearish shape candle, and the weekly color has to be yellow. At least in this case it is magenta. Plus we have many additional signals: weekly bear release, weekly pressure, weekly reversal. In the daily we have additional signals: bearish flow, bearish pressure, bear release. So we have a bearish headwind short setup and also a breakout short setup. Breakout doesn't have checklist, but I tend to take breakouts if they are associated with heavy pressure or heavy volume. In this case heavy pressure was there, so it could be taken as a breakout as well as a headwind short setup. Let's look at its fundamentals and industry strength before confirming if we would continue to hold partial position. If fundamentals are weak, and it is, instantly we know that by having a look at the scorecard, overvalued stock. So even if the stock has earnings growth, based on valuation I am allowed to short. Earnings quality is poor, steadily coming down over last couple of days. The company doesn't make money. So the fundamentals allowed me to short. Let's look at the graph again for the industry. Nice, isn't it? Here the primary secondary industries are in sync again. The industry score for both of them, primary and secondary, drastically reduced. It weakened, and we can see the percentage change also became negative yesterday, steadily coming down. So the industry in this case allowed shorting, the fundamentals allowed shorting, technicals gave a beautiful short setup yesterday from many different angles. So this is the way, though the market is bullish, and even using Q technique we know market is bullish, but we are able to short stocks that are in weak industries. Let's go back to the industry graph. Let's look at the longer term scorecard. Can't you see even more clearly that it is very weak now, rapidly deteriorating, showing deceleration? So the industry allows us to short. I mentioned that even if the market is strong, sometimes looking at industry weakness, you may short. Of course, I prefer the market also to be coming down, but market is very up now. This may be a time one may explore some of the short candidates like IRDM, and I am sure you will be able to find others. I hope you are going to love the use of the industry graphs and how to navigate back and forth from them to the industry score, industry percentage performance. I crossed 1 hour again, but these sessions are very useful for me to demonstrate exactly how I use and how you may use these very powerful systems. The more you use them, the more you see them in action, the more I think you realize how powerful they are in 100% real time. Let me end today's session here. Okay, before that, Fran has a question. There is a delay between my broadcasting and you seeing the screen, and maybe a delay between you type the question and I see it. I see a question. Did the headwind appear Monday after the close? No, the headwind starts to appear from early morning itself, or whenever the price move, etc., all the calculations are made. It is not a end of day signal. In fact, all the Q signals in all the Q systems are in 100% real time. Did it appear at the end of the day? I doubt so. Looking at the very bearish shape candle, I think it would have appeared long time earlier. Even if the headwind signal appeared at the end of the day, which I don't think it did, it appeared earlier, but it also gave a breakout setup yesterday. Based on that, one could short using fine-tuned chart. The key thing to remember is that the risk was narrow. That is a constant in all Q trades, long or short, whether it is headwind, trend following, bounce, box, breakout. We make Q guideline is to make the risk narrow. And that was true when you use the fine-tuned chart in this case. Good question. Thanks for asking. Everybody benefits from these questions. Much appreciate that. And much appreciate you joining this session. I look forward to seeing you in our next session. That will be during the weekend. I will announce the time on Twitter as usual, and you will come to know also from YouTube if you are subscribing to the channel. Thanks a lot. Keep safe and trade profitably. As I always say, no reason not to do so if you are disciplined. Thank you.